Hey guys, in this video, I'll be sharing with you the top 3 robotics AI stocks that we should buy in 2024. And some of them may totally surprise you. In fact, one of them blew my mind. First of all, why robotic stocks? As you can see from the chart right here, industrial robots annual installation is getting higher every single year. Just in 2021, there's more than 500,000 robots that's installed throughout the world, and the total industrial robots in operation is more than 3 million. Into which country is the one with the highest number of robots installation and operation? It is none other than China. When I saw this data, it shocked me because I thought that China has cheaper labor, that's where they can use more manpower, but in fact, they are the most advanced in terms of robotics. All the other countries, Japan, United States, Korea, all adding up together will not even beat China. But the race has just begun. You can see America is reaching new heights in terms of robot installation. One of the key sectors that's pushing all this is the automotive because of driverless vehicle. The other sectors are not too far off as well. China is expected to grow their robotics industry by a compounded annual growth rate of 46% from 2022 to 2027. China being the biggest, growing at such a rate means that there will be more demand for robotics in the next few years to come. Now, the first stock, as we have seen, US, the top growing sector is automotive. And that leads us to focus on the king of self-driving vehicles, Tesla. I'm surprised to actually say this, but in fact, Tesla may be a good investment right now. Even though the growth of automotive has slowed down previous quarter, you can understand for the full self-driving vehicle to work, it involves many technology, and these technologies are highly demanded in the rest of the other sectors. So looking at Tesla bots or even the full self-driving chip, neural networks, and all their other algorithms, Tesla is situated to boom for this robotic sector. Their finances looks healthier each year. We can see that it has grown the revenue steadily over the past 10 years, and the profits has been increasing since 2020. The book value per share has also grown from 0.55 all the way to 19.7 in 2023. The gross profit margin and the net profit margin is also healthy with double digit. One thing to note is in 2023, there's a one-time tax rebate of $6 billion. So we got to be a little bit more conservative in the valuation of Tesla. My favorite matrix, the price to book value. 5 years average being 16.26, right now is 8.71. Almost half of the average price to book value for the past 5 years. When I look at other valuation matrix like GuruFocus website, based on the value rank, it's not actually undervalued, it's 4 out of 10. The idea is 9 to 10 out of 10. And based on the GuruFocus value, it states here there is a possible value trap. One more thing that I may be concerned about is that Tesla is currently at a downtrend. So a better entry would be to wait for Tesla's stock price to go uptrend. So Tesla was just a teaser. However, I do think that it may be an interesting time to purchase a small portion of Tesla. Remember to do your own homework and let me know what you think in the comments below. With that teaser being over, let's take a look at the 3 stocks that I'm looking at for robotics. Stock number 1, Rockwell Automation. This company is the king of industrial robotics. You can see from the picture right there, that's where the factories are using robots, arms, automation to move their goods, to do installation, to do manufacturing. This is a list of Rockwell's automation solutions from aerospace to automotive to cement, chemical, entertainment, and the list goes on. Whatever you can imagine, Rockwell Automation likely has the solution. Talking about automotive being one of the growth drivers in US robotics, working closely with Ford and other automotive manufacturers for this smart manufacturing. You can see the range of the products from EV production, tire production, EV battery production, and so on. Their finances is also very healthy. Looking at the revenue, it was initially stagnant from 2015 to 2019 onwards. You can see it slowly climbing up all the way to 2023, where there was a boost. The gross profit margin lies at 41% and the net profit margin, again, double digit, 15.3%. The book value per share wasn't doing very well in 2019. That's where COVID hits. But from 2021 onwards, it goes back up and is increasing steadily. The current price to book value is 8.84, while the average 5 years is 14.76. This also indicates that Rockwell Automation is currently undervalued based on this matrix. And looking at GuruFocus value rank is 9 out of 10. and Guru Focus Value states that it is modestly undervalued. The charts, however, is concerning because this may be a classic head and shoulder. You can see the shoulder over here, the head over here, and another shoulder. This is a classic chart pattern that says that the trend may turn downwards. So what I will do is to wait for the price to form a higher high, and when it comes down, hitting this support line, that's where the entry price will be for me. Moving on, the second stock is Intuitive Surgical with their 𝗃𝗏𝗄𝐵 5. Now, what do they do? It is robotic surgery. It's gaining popularity because robotic surgery has fewer complications and a lower risk of infection. In other words, it's safer. The news is pretty good for Intuitive Surgery as it forecasts the growth to be between 13 to 16% in 2024. This is much lower than 2023's 22%. However, it's still in the double-digit range. The finances looks extremely good and growing at a strong rate from 2.3 billion in 2015 all the way to 7.1 billion in 2023. Gross profit margin 66% and net profit margin 25%. Beautiful financial results. Book value per share for our shareholders is also building up steadily over the years. However, it's not totally undervalued. Based on Guru Focus, it's 5 out of 10. And it stays to be fairly valued. Price to book currently is 10.34 and the 5 years average is 8.52. So while it's a strong company with growing revenue, growing income, amazing net margin, but the price now is slightly overvalued. You can see from the charts that it is an uptrend stock. So what I'll be doing is wait for the stock price to hit the support line, recheck the valuation and enter at that point. Now finally, the third stock will surprise you, because this stock is not commonly known for its robotics or AI. It is Deere and Company, or commonly known as John Deere. They're known to be in the agricultural space, and some of these machines are the toys that you play when you're a kid. What many people do not realize is John Deere is advanced in automation and AI. In terms of farming and agriculture, they are the king, and they are really having the future of farming in terms of using autonomous vehicles. Example is this autonomous electric tractor and a series of autonomous sprayer. So in the future, if you are a farmer, you'll see all these flying machines around doing all the work while you are probably watching my YouTube videos. Looking at their finances, again, beautiful model answer. Look at their revenue growth from 25 billion all the way to 55 billion, and their net income matching that growth as well. Gross profit margin 34%, not too bad at all, and net profit margin 16.6%. That matches companies like Tesla or even Rockwell Automation. Who is to say that this kind of traditional company cannot evolve to be a growth company? Right now, the current PB ratio is 4.94 and the 5 years average is 5.33. So using this matrix, it is undervalued. Guru Focus Value rank 9 out of 10. Right now, the Guru Focus Value states that it is modestly undervalued. Looking at the chart right now, it's a sideways trending stock. This is an opportunity for investors who know how to write options for income. Now, before I end this video, another bonus idea. In case you do not know which stock to buy, why not consider the robotics ETF, IBOT. IBOT is a relatively new ETF that was launched in 2023. Since the launch last year in April, it has made 29.3%. One thing to note that is the holdings itself does not consist of a lot of the stocks that we talk about today. It does have Nvidia, Autodesk, Emerson Electric, which is not really covered into this scope. However, it still holds quite a number of major players in the robotics industry. If you like this video, do me a favor, smash the like button, subscribe, and comment if this video is useful to you. Let's continue to build wealth, give wealth, together, next level.